Yo, what's good? This is gonna be like almost like a live video. I just gonna make it a recording instead. This is gonna be a long what's up? Say what's up. Say hi.
Happy Halloween!
Happy Halloween. Nice, Nathan. That's funny. Anyways, nice. I wanted to show you a system that I have. And I want to show you that we're doing a unique position sizing on it. We are running a martingale on it with a cutoff. So we're increasing after losing. So you can see in this case, this is what I'm looking at. I'm looking at when the market goes sideways and the market has not gone, hasn't gone 2R yet. So if you can see this, the 2R mark I'll show you is here and here. So you can see that. You can see that. Yeah. Yeah, you can try to break it. It won't pop very good though, because it's almost flat. So I want to show you that in this case scenario, just if we look at the chart, in 20 minutes, the market goes from back and forth, and we track how often it goes back and forth, and what it's on right now. We wait until hold on. We wait until 3 trades pass on by before doing it. So I want to tell you that when we select a zone, a risk box, we don't select it with our brains. We just select it automatically. And all we do is track the score. And the idea is that we have a risk box here, and for it to go 2R away from the risk box, from the box, up or down, doesn't matter. For it to go 2R away, it usually takes on average about 2 times to do it. So 2 losses have to pass on through. We try once, we try twice, and then we get the movement of 2R. So we lose 1, so that's -1. We lose again, now we're down 2, but then we make a 2R. And now, guess what we get? 2R. So -2 plus 2 is equal to 0. So we actually get break even. It's overall a break-even system with 5,000 iterations. It's not even 5,000 trades. That's are you sure? Yeah, 5,000 just campaigns of trades. So
What happens when you put his food and then you pop it in the butt?
you can pop it on your butt. Try it. Squeeze your legs. It won't hurt. It's not that's not going to hurt you. You can do anything you want. All right. So, what I'm trying to say is that it's usually going to go average is twice, and then it hits the 2R because the market doesn't have any edge. I'm telling you already. I already said the market has no edge, but the idea is when to apply the system. That's why I'm all obsessed with finding a scoreboard. Like, let's just track the score of this. How long has it gone? It's supposed to get done in 2R, so it's gone 1, 2, 3, 4. I don't know, 3 already. 4, 5, 6, 7, 8. Because we start trading at 3. We can start trading at 10. It has to go 10 sideways movements before we say, all right, let's start betting on the 2R happening, the breakout of the range. So that's what we're saying. Now, 1, 2, 3, 4, 5. You can see how in this case scenario, it didn't get to 2R. It did not get to 2R for many trades. And we can see this. We had 1 contract, 2 contracts, 3 contracts, 4 contracts, 6 contracts. Now we're controlling 9 contracts. Oh man, we're controlling 9 contracts now. So we're increasing position size, and that's why you can see this chart go up like this. You can see the drawdowns are quickly come back because we smother. Oh, we lose? All right, no, we double down. Oh, we lose more? Double down, bigger. And we have up to 14 contracts. So use micros. And to push that upwards, and you can see that line upwards is such a solid uptrend. This is not, you know, this segment of time. This is not a glitch. It is a normal. The way I position size forces it to go up. Okay, this would be entirely different if we never changed position sizing. It would be entirely different. It would be way more sideways, okay? But we force it to go up because of what we're doing with position sizing. We're doubling down after losing. This is not always the answer. Why is it not always the answer? Because this can happen. Literally half of your profits that you just made in 300 trades, you lose in one campaign of trades, which is eight trades in a row you lose. So because you double down, you know. You get a serious loss, you know, that happens. That's the drawdown of the system, okay? Now, what if there was a way to see that there was a drawdown and say, all right, we're going to start trading it after a drawdown, because this system is naturally inclined to go up. Every time you beat it down, it inclines upwards. It grinds up. Every waking moment, normally, if it's not dropped huge, it's inclining. So the idea is that once after a big drop, we incline it. We just turn it on, because it's very rare that you're going to get two drops in a row. And this happens to be bigger ATR. You see a bigger drop here. Why is this bigger than the others? Because the market was more volatile around April. And that's March. Yeah, it was leading. It had a little bit of a bubble volatility in March, but then April really kicked it off. But this was in March. But the ATR was bigger. The volatility was bigger. And my risk boxes here are based on ATR. And I don't have variable position sizing on here other than martingale. So when it's a bigger ATR, you're going to be risking more. Just the way it is. We could change that, but I don't want to. Not yet. So that's the idea, okay? That's the idea that after a big drop, we can bet on it going up. We can bet on that. That's the bet. And what specifically is the bet? The bet is once it goes 3 times in a row sideways, we start betting on it going 2R. Either one. So it goes upwards, we go long. Oh, it gets stopped out, we go short. Oh, almost a target. It goes up, we go long. And we're adding in more size every stop out. Oh, we lose right away. Now we go short with bigger size, and bam, you get our 2R. We get our 2R right here. Okay? And look, this is an example that goes really far. It very often doesn't. I'm telling you right now, it very often does not wait so long to move. Like in this example, I think this was too much volatility on June 5th here, but June 5th was a bigger day, yeah. But this one was yeah, I mean, you can see the box here. It was only one trade loss, and then it gets your 2R target. 2R is not far away. It can move very quickly. These things can happen twice a day. How much happened today? I didn't look. I didn't look. I gotta look at. Let's look at today. Yeah, Nathan. Let's go 45 days back.
And then you pop it.
Pop a balloon?
Yeah. Pop it when somebody hides it, and then you pop it.
On your
when
butt?
You hit on it and then pop.
That might hurt if it's a full balloon, but a little balloon like that won't hurt. And that would be it would be funny, a little bit funny. That would be a little funny. You'd like to do that? Yeah. You're not going to do it? Okay. All right. The last 45 days back, I think we had. This is the last 45 days. We don't have a big loser, but I want to show you today. Today, we had no opportunities. Really? Interesting. We had no opportunities today. It's presently trading. It's gone 2R. It hasn't gone 2R. It's gone sideways twice. Yeah.
If you don't put like this, it will not hurt.
It would not hurt. Not at all. So I basically I just want to say that I sit in that spot. Don't you put it on my spot. Don't you put it on my spot. So I want to look at this. Look at that. I just love the graph of a martingale. I mean, I have yet to experiment with the opposite of this, like just waiting for the big win like that. I have higher risk reward systems, but like this crazy is different. Martingale is way different because it's so rare that you get that big drop. It's so rare. It's just crazy. Okay, good. Thanks. I don't know if he's lying. Are you lying? No. Okay, I'll take that as a no. Nope, you're not lying. So I just wanted to show that is the case. And yeah, it goes down, but it comes right back up because we add in size, and you can only lose so much. You can only lose so many times in a row, especially with a 2R. Especially with the 2R, asking 2R. So that's what's going on right now. I like the idea, but I like the idea not right now. You know, I love it. It looks upwards, but you don't know the back half of it, right? We don't know that just, you know, let's say double 90 days back. I don't even know if a loss has happened 90 days back. Yeah, I mean, you see that chart, right? The 45 days. This was amazing, right? But this is following a big event down. This is following a gigantic loss. A absolutely atrocious loss. That's what martingale is susceptible with. You can have some absolute filthy losses, and we do not like those. Thanks, Nathan. August 21st. I want to see August 21st. What happened August 21st? So it has to go... Okay, this one went 11 times. This one went 14 times. So 2 losses in a row, actually. You can see it there. 2 losses nearly in a row where it went sideways so much that day and then so much for a long time, August 22nd. We can take a look at that as well on the chart. But it can and will happen. That's the idea. It can and will happen. How are we going to protect our capital? My friend. I tell you what, I'd like to start it right after a big drop, but we just saw a drop and then 2 trades, 2 campaigns, and then a drop again. There's 2 massive losses there because these are rare. This is relatively rare that this should happen, that this can happen. So it's very rare. I mean, you look back in history, you look back across symbols. I'll probably test another symbol here, and with the same settings, and it's just very rare that you get these big losses. You get the big losses like that. So yeah. Nice. This boy needs a brother. This boy needs a brother, I'm telling you. All right, so but you can see that, yeah, it can go up 35 grand and then get dropped 40. This uprising right now is from negative 80 to negative 50, so 30 grand. I mean, are we going to expect a drawdown? I'm telling you right now, I wouldn't start martingale right now. I'd start martingale after a big drop. That's what I would do. Let's just test the same timeline, but let's test gold or crude oil or anyone, really anything. Let's do nat gas. As long as nat gas doesn't have some crazy gaps, I'm good with it. Yeah, I mean, they have too many gaps. I'm not interested. Let's just do ES. No, ES is too closely with NQ. We just tested Yeah, so let's do MGC, gold, micro gold, because we're going to... Nice, thank you, Nathan. Hey, I don't like this. Flat pancake. All right. I want to see this. The tick is going to be a 0.1. Yeah, and we can always increase the amount of sideways movement before we start jumping in, betting that it won't go sideways anymore. We can always do that. Yeah, so let's see what happens. Micro gold the last 90 days. We just did NQ the last 90 days. Now we're doing micro gold the last 90 days. It's in a trade right now. That's interesting. It's gone sideways too often, too much. So now we're saying, all right, we're going to say movement, but we'll see if it's profitable or not. You can see that there hasn't been a loss yet. So in 90 days, it hasn't been a loss. You see how excellent the chart looks. This is possible. This is actually realistic. The boxes are not that big. We can keep track of them. It can ding us when it starts. It can actually operate for us. The idea is we capture the uptrend, and then we jump ship and wait for it to drop, which we know it's going to be dropping. So let's say that was 90 days back. So let's say 180. You're probably going to have a loss in 180 days. You just escaped with 3 months without a loss. I think there's going to be a loss soon. I think there's going to be a loss, and you know what losses do, especially with this martingale position sizing. That's what can happen. What we just looked at is this area. We just saw a fantastic system, and what we don't understand is that these big losses can happen. That's the idea. So what happened right after this? Actually, 90 days, I don't know. This is a trade count, but whatever. I mean, I think we should start the process after a drop. But again, the problem is here it dropped and then went up a little bit and then dropped again. So it doesn't just like cyclically do it. It's not predictable on, let's start the uptrends right after it drops. This one happened to do it. We can ride a lot of that. That's a lot of money. If we do it right, we just do it right after a big loss like that. Like, look at this big loss, and what do we ride? We ride a little bit upwards before it big losses again. And in this case, how are we going to do it based on past performance? Like, I can only get like small amount of trades afterwards until a big loss happens. Right now it's happening and just pretty much waiting. It's teed up for a big loss to happen. So that's the idea. Do we want to bet on the big losses? If so, then we're going to be betting on mean reversion. We would bet on this box continuing, and then add size in, and you do it 8 times, you win the big one. You win 8 times, you win the big one. It's just so rare that it does that, and you're going to be losing the entire time that happens. It's tough. Nice. So, anyways. Nathan, you can probably shut that door now. I don't know if it's getting cold. So anyways, is it a profitable system? Of course not. I'm trying to make it where we can get this steady up movement. But the thing is, it's just not okay. It's just not okay to have that black swan event against us, and you can't have that in a system. You can have that in prop firms. This is a prop firm system. That's what this would be. But this is not a portfolio system. You can't do it. And it's not worth it with such small size anyways, because the losses are huge and the wins are small. You can only do this with a prop firm. So right now I have a prop firm that I can control 15 contracts. 15 contracts. And so what I'm going to have to do is look at the drawdown of one big one. So 10 to 6, so $6,000. So that's about the risk I need. So how much can you make out of it? From about $4,000. Okay. So on a big up move, this is a big steep incline. So I'd wait for poor performance and then start betting on it. So let's look at crude oil, see if it's ready. Right now, in fact, gold, I would bet on sideways movement. It's done too much, too much movement. I'd bet against the system on the big thing happening. I really would. Let's look at MCL. No, you actually can use crude oil unless it's too big of zones. Probably is too big of zones. Let's take a look at it. Crude oil is way different. 0.01. Let's see the last 180 days as well. I'd rather do less days than that, but it's all right. And then we're going to close it up. I just wanted to show this. I thought it's a very nifty situation. Let's see the results here. All right, you can see that crude oil seems to move a lot. It seems to move. It does. And you see this big movement down. Believe it or not, we were on our last trade, it looks like, nearby our last trade, and we won that last trade. And because of that, it stays where it is. It stays up and moving, up and moving. And then we do receive a big loss here. And now is the time to start the uptrend again. That's the idea. After the big loss, we want to start that uptrend again. But in this case, how many trades has passed? I mean, September 23rd. You're a month late, you know. You're a month late to this. You're a month late to the party. You went from $5,000 to 10 grand. You're $5 grand. I mean, you missed out on $5 grand. You got to do this right away, in my opinion. In my opinion, you got to do it right after a big drop. You start. So let's just take a look at one more thing, one more symbol, and then we'll be done. ES, euro currency, silver, copper. I thought I did copper already. Soybeans, treasuries. Treasuries seem weird. Let's do treasuries because treasuries seem to go sideways all the time, don't they? Let's do treasuries. So treasuries is going to be interesting. The tick value is 0.01562. Hold on, 1 divided by 32. Divided by 2. 0.015625. 0.015625. That's correct. So let's run it. Remember, it's the same exact stats. It's the exact same thing, exact same position sizing, exact same everything. Did he swallow a basketball? I think that's going to hurt his belly, isn't it? Actually, Squishman can never be hurt. He's never hurt. All right, so let's take a look at this right now. So it seems like treasuries are so mean reverting. We take a ton of trades. I'm going to guess that this is going to be very, very negative chart. Yes. What?
I put the basketball in. No, not that.
Oh, it came out. Nice.
It's like it done.
Yeah, it kind of is.
It's hot right out.
So let's just zoom in on this again. I know the big drops. I get it. Okay, but I'm specifically interested in these areas where it has just dropped, but ever since the drop, it just glides upwards, and you receive a very, very, very solid up sloping line. That's what we want, you know. So you have a big drop, you have upsloping, big drop, and now it's upsloping. So that's the idea right now is actually the time to start the process. So TY, it's the time to start the process. What do you want to do? How long do you hold it, you know? I mean, I would hold it for not much longer than this is maybe half, 15 trades. This one happened to go from 30 trades to 80, so 50 trades. I wouldn't hold on to it for more than 20 trades, 25 trades, and we're likely going to see an incline. We're guaranteed if we don't receive a big loss. Nathan, you have to clean all that up, you know. You don't have to get it all over, right? So yeah, that's what I'm thinking. That's what I'm thinking. Honestly, I think this is a decent way to. It's a very. It's not a consistent system. No, it's just a system that lasts. A system that lasts for a small amount of time. That's what I would do. Honestly, this is what I would do. I think it's prepared. It's ready. It's had some mean reversion here, and now it's ready to move more. So, again, this is long right now. So, this is long right now. It's already working right now. That's what we should be doing. Long, and we're betting on that this thing goes upwards, and then it gets teed up again, just like this. It gets teed up to get knocked down, just like gold is ready to get knocked down. Gold, we should bet on sideways movement, and try to get that because it's coming. It's coming. TY, we should bet on movement because it just dropped, glided, dropped. Now it should glide. Obviously, it doesn't have to, but I mean, I think it's fine. I think that's a good idea. So that's about it. There is other things to do. You can start the adventure way later, which is another story. I mean, this is 3 trades into the sideways movement. You can go let's wait until it goes 5 or 6 times, 6 plus 7 is 12. So you can go wait till it goes 6 times to start doing this. So we're taking a far less trades, but they're probably more accurate. I don't know. Probably, right? Because I don't know. I mean, look at these 15s. 15. You're going to lose on 15s. So we're going to have some losses here. Yeah. So it doesn't, I mean, you can go as far out as you can and then always win, but you're never going to trade. I mean, you might not take trades for 6 months. Where's the dates here? This trade's quite a few. I mean, about once a month. That one trades. I mean, you can go even further out. It's crazy. You can go wait until, let's say it goes freaking 9. Say it goes 9. 9 trades in a row it has to go before getting us in. Here we go. Let's see what happens. Let's see what happens. Probably going to have only wins. Yeah. So it's very limited amount of trades, and then it generally will go up unless there's a massive loss. But it's just so limited. And I mean, let's test this. Okay, we didn't lose. You're right. We didn't lose. We didn't lose on TY because we'll probably not ever lose. Let's go to ES. Let's go to ES. We haven't tested ES. Let's go to ES. Let's test this for a freaking 2024 and 2025. That's a lot of time. And now let's see how much we lose. If we ever lose. Probably will. Probably going to find a loss. Let's see it. All right, this will be the last test. I got brownies in the oven. We got brownies. Do you think they're done? I think they're done. We got to go. We got to tend to those. Don't open it up. You can just look through it. Don't open it up, though. This will be the last test. Come on. Let's see the losses here, boys. No losses. I mean, in 2 years, you had, 10 trades? This is not a system. I don't like that idea. Look, yes, it's very rare that it goes sideways that long, and we wait until it goes 9, 10 times in a row before starting to bet on it moving away from it. That's very rare that happens. But, all right, what I'm thinking is just find the uptrend, and then just ride it and then you get out. That's what it is. It is a gamble. Yes, it is, but what is? What isn't sometimes? What isn't? And I would do it prop firms, no portfolio. What are you thinking, Nathan?
I think we just to check oven with brownies, maybe. So you think they done already or not?
I think they're totally done. Let's go!